I was exhausting my emotional tolerance to the point where I was becoming kind of depressed with work. And I decided to make a major life change. I always had interest in the stock market, but didn't really know how to connect the dots. And I was cruising on YouTube one morning while had my E-Trade account open. And I found Deck, and I was like, this is pretty cool. Like, I've never seen this style of trading. I've heard about day trading, but I had no idea like how intricate and how many components and variables were involved with it. And I said, like, this is something that I could do, and something that I want to do, something I want to learn. So that was kind of the stake in the ground for me. And I made kind of a rash decision to leave that that stability, that cushy high base salary paycheck behind, and go into into day trading full time. And it was really scary at first because I didn't have a backup plan, and it was kind of like it's the Vikings go on the beach and they burn their ships because it's either they're gonna take the land or they're gonna die trying.
Right,
they're not leaving the beach. So that's kind of what my perspective was. It's like, it's this or it's nothing. So I just inundated myself, and I became obsessed, hours every night, staring at my phone when, my wife's sleeping, my kids are in bed. I'm training, I'm exhausting myself to the point where I legitimately just wore myself out. And, I got to a point where, I thought I knew enough to get going. So I put a big chunk of money into an account, and I blew it up, and I got my ass kicked. And I was like, all right, I don't know as much as I need to know to do this. And that's where, that's where I really started. You have kind of an emotional tolerance, and in this game you have to kind of take a loss on the chin and move on. And that's where a lot of people quit. They take their first big loss and they're like, oh, this isn't for me. They get nervous and they back out from trading.
Right. That's why I tell a lot of traders, that's a lot of reason why there's that 80 to 90% of traders loses, because that right there is not because they really lose, because they lose at one time and they give up. There's a lot of reason why there's only 10 to 20% of successful, is because traders like you and I, persevere through all that, where most say, oh, that's it, I can't do this, this isn't for me, and it's done.
Yeah, exactly. Yeah. And at that point I was just like, all right, I got to reinvent this wheel. And I slowed down, I sized down, and I started paying more attention to the fundamentals. I think that the stock market is something where you have to adapt to survive, but you really need to focus on what you're good at. I was buying for breakouts. I was, shorting trend lines. I was trying to do everything. And that's where I think a lot of new traders mess up.
100%. I say this all the time in my sessions. That's because you just don't know what trader, like I say in chat, you don't know what trader you want to be. You've got to become your own trader. Otherwise, you're doing all these things. And yes, you probably know how those setups look or what to do, but you know how to trade them? No, because you haven't tried them and you're not successful at them. You need to become your trader, find out what you're going to be successful at. Love it. Love it.
Exactly. There's things you have to adjust. Like when the market's slow, you have to slow down, size down. But you do have to have that kind of subconscious understanding of what you're good at. And, it's kind of like learning a new language. You might have the fundamentals built, but until you go to that country and start speaking that language on a daily basis, you're not going to get fluent. You're not going to learn the slang. And that's where, screen time comes in, and just being in front of the monitor. As boring as it sounds, I could stare at a chart from 8 to 4 and, not look away, not even get up for lunch, some people are like, that's crazy. Why would you do that? But for me, it's like, that's the way my brain works. I'm starting to speak that, that fluency in that language. And that's where you need to get to be successful.
Right. And now you just need to add the slang to it, and then we're rocking and rolling.
Yeah, exactly. So, I think the biggest mistakes I made as a new trader was, instead of nibbling, I jumped in. I put too much in too fast. I blew up an account, to the point where I second guessed myself. And, in this game, it's like, I don't know many traders who have been successful without failing first. And that's what separates the people who, make millions and the people who quit after they take their first big loss. Is like, do you have the emotional tolerance to just move forward? So that's my one piece of advice: is start out slow, size down, learn scaling in and out. That's been a huge game changer for me. Not to indict anyone who trades like deck, where you just take a huge chunk and throw it in. But if you can catch a slower trend and scale into larger size, you don't have to have that perfect entry. You don't have to catch it at the top or the bottom. You can scale into that move slowly, and actualize a profit, in the momentum that you see that stock shifting. So that's kind of my philosophy.
So real quickly, time wise, so traders know, year wise, when you first started, the struggles, how long that took to when you became successful to where you are now. What's that timeline? So, because I know a lot of traders in their head, I want to know a time. So what's that timeline really, essentially?
For me, from like getting in front of the screen all day to finding success, it was about 12 months. I think a year is a good target to get that, fluency. And honestly, in the last few months, I've kind of had that, epiphany, or that moment of clarity, where I discovered that, I don't have to play every play. I don't have to follow other traders. I have 3 or 4 plays up that I watch, and I slowly and patiently wait for what I want to see. And when I see it, that's when I attack. Like you say, a stock sniper. You really have to focus on your play, and kind of white out all of the background noise. Because in chat, you'll see hundreds of alerts that half of them are just a minutia, and you kind of have to just focus on what and don't get into the hype, and don't jump into something because someone else says, oh, this is going to happen, because 8 out of 10 times they're going to be wrong.
Yeah, and exactly. Literally, I found like you said, you have that moment of clarity. You realize, hey, this is what I'm going to trade. These are the trades I'm going to be looking for every day. You're going to be doing. You realize I will be doing the alerting. What I want to look for, I don't have to look for other alerts, and it definitely helps you out. And like you said, just that stock sniping mentality. So that way, it slows things down. You're looking for your plays, not having to search for plays. Your plays are going to come. You're just waiting for them essentially to set up.
Exactly. Yep. Exactly.
Well, good. So that's awesome. And I'd say the same thing. And I didn't realize that at first. You kept saying the screen time, watching the tape, however you want to word it, but get in front of them and watching chart from literally start to finish while deck's going live. Because now you got me during lunch. So you have all day long to kind of have someone talking to you. Just watch it, and watch what you're watching, breaking down charts, going over your trades. The more you get that screen time in, essentially, however it's getting in, that's when you're going to start getting things faster and faster and faster. And like Alex was just saying, like I always say, you're going to start realizing what you're doing good. You're going to start doing that more if you want to do this for a while, and you're going to stop doing what you're not doing so well and go, that's cool. I don't need to do those things. Here's what I'm good at. I'm going to just do these all the time because I'm profitable doing this.
Yep.
So pre-market,
exactly.
Let's get into that. Same kind of questions I want to know. A lot of traders, because you definitely are good with your alerts. You're finding things that I'm not even looking at, and I see your alerts. I'm like, thanks, Alex Vaughn. I wasn't even looking at this, but now I am, and here comes a short. So what are we looking for each and every day? When are we trading, pre-market to the closing bell? Since I know you're there all day, you're one of our awesome traders. That's why I made you gold. You're there. You're here all day, every day, nonstop, giving out great alerts. So what are we looking for? Whether it's pre-market, it's after hours, it's during the day. We'll get into the setups. We don't break anything, right down yet. But what do we look float-wise, news-wise, setup-wise? What kind of stocks are we looking for each and every day, and what you're doing, kind of scanning in pre-market moving forward?
I'm kind of float agnostic. There's a lot of people that really want the low float, fast-paced movers. For me, I like plays that I can squeeze and get every, little bit of profitability over a long period. I like
the trader when he has that little thing with a squeeze in the lemon. It's like you're gonna squeeze every little ounce of juice out of that lemon. I love it.
Exactly. I want to be in a play for, an hour, 2 hours, and that's different from a lot of people's strategies. But, for me and my emotional tolerance, I would rather not, feel like I'm gambling. And a lot of times when I'd go after plays that are much more volatile, I find myself, second guessing, the click of that mouse. And that, I think, is the biggest mistake as a trader, is when you don't feel 100% confident in the play that you're getting into.
And that hesitation that comes with that, not clicking that, so that, and then you're done. As soon as that, like in football, of course, or basketball now, that any hesitation, you have like, obviously me with sports, but that anything you do in life, a doctor's performing surgery and this person needs a little bit of hesitation the wrong way, anything you do in life, detrimental big time.
Exactly. So to get back to your question, I like things that gap up in the morning and then tend to hold their level to an extent, but not get a lot of volume. I'm a short bias trader, so I like things that kind of sit, at a higher level, but aren't getting any more attention and kind of start to fade off. You use that term Archie, like that's my favorite look in a stock. And I typically can start to scale into those plays on the pops. One good example right now is the EIGR play.
Right, exactly. 100%.
I've been kind of slowly scaling into this play as it pops up. I'm kind of on the fence about this one. It's not going the direction I'd like currently. So I have a stop loss set, but I'm still in the play. And I think that's one thing you have to get used to also as a trader. And Mark Douglas helped with this. He's got the book Trading in the Zone, is getting that emotional tolerance to see some red on your plays. And this is something that I made the biggest mistake of when I started out was, I would enter a play, and as soon as I saw red, I would, close it out, or I'd set a stop loss that was too close and it would go right down to my stop loss and then pop back up. Honestly, as a day trader, I think stop losses are, a huge mistake in certain circumstances, because market makers can see exactly where your stops are, and they can, push the stock down just to absorb that, stop loss, just because they know where it is, and they pop money. It right back up. Yeah, exactly. So I typically use mental stop losses, and I keep my levels, charted on my screen, but to the point where I know where I need to get out, and it's not like a physical stop loss set in the system.
Right, and that's how I do the same thing. Mental, and then when you can get to that where you don't have to feel like you have, and that's understandable. Early on, you have a problem not sticking to your stop loss. You were doing mental, and you're just one of those ones. I'm in it, $8.75, and it's down to $5. Totally understand. Let's put those in so that way you get a little disciplined down to where you need to put something in. But over time, when you're super disciplined and become a well-rounded, a little bit more established, and like you said, things click a little bit more mental trader, because let's be a little bit more of a mental stop loss. And then like you said, putting them in, market makers are going to see that, especially if it's too tight. So I like doing what you do and kind of saying, okay, I'm going to stick to this with certain areas. I know over certain criteria I'm not going to stay in it, but everything you're saying, I just love it. It's very much what I love to hear in traders, and just being your own trader. But it's a lot and like same with Matt, same with what you're saying. All this is lining up with exactly the same alignment, and so that's what I love to hear it. Because especially I teach traders in chat, if we're all trading the same setups and styles, guess how much more money we're all going to be making.
Yep, exactly. And honestly, there's no silver bullet. There's no right or wrong way to be successful in the stock market.
100%.
A lot of people have different strategies, and for me, I didn't do very well on the aggressive, fast, volatile moving stocks. My brain just could not focus on multiple plays at once, which I like to do. And I enjoy just the scaling factor and having the ability to evaluate the play as it's moving, versus jump in and throw my hands up like I'm on a roller coaster.
And a good example and like I said, and I bring him up all the time. Love the guy. You can tell he's and I've kind of got to know him back in the day. I tried to during social media when he was, but Ross Cameron over at Warrior Trading. Of course, he's gotten so big now. He used to respond to DMs back in the day, but he's such a sweet guy. Is my point. He's not rude. He's not obnoxious, but he has essentially one trading style, and it's super aggressive and it's super risky. But dude knows what he's doing, and he's really good at it. And so that's what I tell traders. Listen, you can have any setup or style in trading, whatever you want to do, right? You can do, if you're using your phone in somehow, if you're using back in the day, what was that one that was in the Bahamas that closed down? Was it Sure Trader? I think it was. That was just super risky. Whatever broker, well, I don't care what broker or knew the new one's kind of Robinhood, I guess. whatever you're using and you're successful, I don't care if you're using a calculator, whatever you're doing, keep continue to do that. Like we kind of talk about, be your own trader. But yeah, there's no like you said, silver bullet. If you're gonna trade our but if you're gonna trade our setups, trade them like we're gonna trade them is what I was saying. But exactly, trade you, be you, do your own setups, do your own styles. But yeah, I kind of like. And so, what else are we looking for in pre-market besides, of course, kind of like EIRG, kind of overextended movers that don't do anything? What else are we maybe looking for moving into the day or even into the day?
I do like the very hard, and I call it, I guess you'd say over aggressive gap ups or impulsive moves, especially when there's not news. Those are kind of my favorite go-tos as far as an early pre-market short. A lot of times, the mob's kind of adjusting and going from stock to stock, and they don't know exactly which one they're going to play. And things just pump up and then die out real fast and then fade off for the rest of the day. So when I see things kind of impulsively move pre-market, sometimes I'll start to nibble, add 10, 20, 50, 100 shares as it goes up, and not necessarily get in with great size, but I like to have that cushion of I guess you'd say the green. I call it the cushion and the green. What that means is, as the stock, if I'm shorting, as the stock goes down, I'll take a little bit out. And then when it pops back up, I'll throw more shorts in. So I'm constantly pulling funds and, pulling a realized P&L out of that play, but I stay in it for a long time. So, I'm never closing out the full position, but I'm taking shares out as it falls. And then as it pops back up, I'm adding more to the short. And then waiting for it to fall more. And that cushion in the green above my entry is kind of, the leeway that I give it, so that if it gets up to that point, then I'll stop out, or I'll close the position, or I'll make the decision based off the level 2 as to whether I'm going to risk further and go into the red to add more shares.
And I guess will we get into this cushion?
I
don't know if you'd go over it in maybe one of your examples.
Yeah, I can do that. Do you want to share screens?
Don't mind saying that, but Wilson, sorry, I forgot I muted myself. But Wilson, if you don't mind, Alex, I should say, did you hear that, Alex? You said, how much did you make last year and how much this year so far?
I'm not one that's going to go and tout, a monetary amount, but let's say that this year,
you can get percentages if you want to. Percentages would be good. Yeah, whatever you want to, though.
Yeah. I've made enough to support a comfortable living with 6 people and a nice house and 3 cars. Let's say that.
That's pretty good.
I'm a year in, but my win percentage is around 77% currently, and that has exponentially improved as I've gone from a long trader to a short bias trader. So in the last 3 months, my win rate has gone up about 15 to 20%.
Cool. All right, cool. Yeah, now let's get into this cushion. So let's go and get into this little, if you want to, and kind of go over it, what you're looking for the cushion.
Okay, cool. Let's see here. All right, so I don't have an active example of the cushion, but I do have 3 things I wanted to kind of go through. And let's start out with one of my favorite strategies. It's called the dip and rip. And this is one of the only long strategies that I still implement, even though I am a short bias trader. So on a dip and rip strategy, what I look for is panic. And when I mean panic, I mean like unreasonable sell-offs, like to the point where, you're wondering like, what the hell is going on? Was there bad news? Is this just something that's going to crash all day? Like, people are getting scared. They're hitting losses. And this morning I was watching PDD. I have no idea what this company does. Don't really care. But I noticed that there was a major sell-off, and you can see, from here in the 41 range down to 37. I saw this, start to fall, and it broke this this shelf, I guess you'd call it, right here. So I looked back on the time frame to see where the major support levels were. Sometimes you have to go back, to 15-minute, 60-minute charts. But I looked here and I could see, in prior days, all the way back to the 8th, there was kind of a strong support shelf right here where it bounced twice. And then it had some resistance here. And then it kind of hung out in this area as well yesterday. So I went and I put that line in, and I went back to the, the 2 to 3 minute chart. And I said, all right, there's a very high likelihood that this stock in its panic sell-off is probably going to hit this support level that I just identified from the previous days and bounce. So I started scaling into my position at 37 in the $37 range, and actually added to that position heavily as I got a confirmation of a bounce. In which case I started scaling out and added more as it bounced down. And then once it identified a downtrend, I took my full position at this point right around here, because I noticed that there was an identified downtrend.
Got it.
And you can see that the stock, even came back down to that exact level and got another bounce, and then went back down and kind of dipped a little bit below it, but took another bounce there. Like you mentioned, sometimes like throwing a basketball, it's going to bounce a couple times before it stops. And then it squeezed up. So that was kind of my big play for the day today. And I took about $500 on that one this morning.
Exactly what I'm talking about. Just so traders know, getting tighter, the whole tighter and getting tighter and tighter and tighter. Like right there, getting like the basketball effect, and then like you said, you can see that, and it is a downward, wedge, which can happen exactly, and then it squeezes and pops out of that downtrend, which is crazy. We're showing this. It'd be so funny if you're in because Jay trades is next, and that's one of his main strategies, downtrend breaks. He goes over the same one, but he goes over the downtrend break. But I love it. That's beautiful.
Yeah,
right there.
I mean,
I love it. That's beautiful right there.
I mean, you can see it on multiple charts. The dip and rip strategy. I'll show you another example that I wrote down here, and you can do it whether it's downtrending or uptrending on a macro scale. But check out this chart here. So as I identify this one, I would see kind of a pretty major sell-off. There was a big spike in the morning, a major sell-off, and I would put a support level in right in this area, and you can see where there was previous resistance. Obviously, there's new support. So
yes, my sandwich.
I would see this big spike in the morning, and then I would identify as the stock started to fall that there was support at this level, and this is where I would start my position, scaling in from a long standpoint. And I would ride it. I would take a good portion of it as it kind of hits this level right here, because I would identify this failed bull flag as a potential area where we would struggle. So I would take a portion of my position out, and usually on these ones, once I find green, I either set a trailing stop loss and move on to the next play, or I set a stop loss somewhere in the green and just let it ride. And that's just my personal style. I don't like to risk, any money once I'm in a profitability zone. But this one is a good, kind of intraday example of how you can also short multiple times, even on uptrends. So, from this standpoint, you could take a short position here, ride it all the way down to the original trend line. You could go long. I would hit this point somewhere in this range if possible, and then try to ride it back down to the original trend line. And this one, as it's sitting right now, actually, to me, this looks like it's kind of in a bearish position. I see, and I don't know, when I talk about kind of the fluency, it's almost like more of an art than a science. But, when I'm looking at these candles, I would watch the level too. But, if this one fails at this level, 35.84, 35.98 range, I would start scaling in, if we get a pop here, because there's a likelihood that I think it's going to probably break this trend line within the next 10 to 15 minutes. that's just my kind of perspective of what I'm seeing.
And just so traders could maybe get a figure of where you would want to start maybe scaling out at as that started falling down through the trend line crack.
Yeah, absolutely. You want to look at previous levels of resistance for potential areas where you would want to pull some profits. So I would be looking in this range somewhere around 35, 35. I would probably definitely take a chunk out, as it hit this level 34, 35 range. And then for me, I would probably just let the rest ride and see where it goes. I found a lot of times, I pull my full position out. And I find that it continues to go the way that I, had initially planned, and then I kick myself. It's like, I could have squeezed more profit out, and that's where the next component of my strategy comes in, which is the 8 and 20 SMA.
Cool. Yeah, let's go over it.
So
Let's
I wanted to touch
over it.
Kind of a cool or an easy transition into that strategy, but let's go to pick for this one. All right. So for the 820 SMA strategy, typically I'm looking at it on a larger time frame. And when any trade I do is typically looked at, on multiple time frames. I will get my indications from looking at, the 5, the 10. I typically look at the 5 when I'm going into a short position that I'm planning on holding. But pick spiked this morning. I identified that there was a major supply zone right here. You can see the tweezer top, multiple wick candles in the 5-minute chart, and that just is indicative of a lot of people not wanting to push the stock higher than that level. So that would be my first indication. And I don't want to steal his thunder, but I replicated a lot of this strategy from watching.
Go ahead. You learn who you learn from. It's good. Go on and talk about it.
Yeah, this one's been a good game changer for me. Living Like Matt shared this strategy in his initial interview with Deck, and if you watch this is the 8 SMA, the purple line, and the 20 SMA would be the red line here. Whenever those cross, you're getting further confirmation that your trade is a safe one and that you can continue to hold. And you can look at it on different time frames because they might not be crossed on certain time frames. So this one, for example, it's kind of like looped up and down multiple times on the 2-minute. But if you look at the 5-minute frame, you can see that there is a definite separation between the 8 and the 20 SMA. So this one has, in my opinion, a great ways to fall still. Would I enter a short position here? Probably not. I think, swimming after the boat once it leaves the harbor is never a good decision. But, if I was in this range up here and I saw the 8 and the 20 SMA cross, I would continue to hold this position, and I would kind of back out and look at it more on a macro scale. So if I go to the 10-minute level, I can see that there is an aggressive cross of the 8 and 20 on this level as well. And until these two lines start threatening each other, in my opinion, this is a very bearish stock, and there is still a great ways to fall, especially because it's up 75% on the day. So,
so did you short it early? Did you short PIK today? Pick.
I did not. I missed out on this one. I was focusing on PDD, and I didn't get this one.
That's what's funny. Everyone's either focused on PDD. Isn't ever focused on one or the other? That one or PIK? It was either one of the P's essentially.
Yep, exactly. So that's one of my favorite strategies. As far as consistency and taking emotion out of the play. You're always going to be emotional. You're a human, but if you can get confirmation that your thesis is correct by using statistical averages and provisions that are easily monitored, like the 8 and the 20 SMAs, you can take a lot of that emotion out, and you can hold your positions with more I guess you'd say emotional tolerance.
Oh, I got a question in chat. They want you to see the EIGR play. Agaska 1421 wants you to go over the EIGR play.
Okay, yeah, and I'm still holding this stock on a short. Let me go to a smaller time frame. Check this out. See where it's at right now. Okay, so I got into my short. I think I notified the chat that it was looking kind of bearish. You use the term Archie. This is kind of the range where I think I entered my short position because I noticed that the stock was hitting a supply zone, and I can draw it on the chart here. This area right here, you can see that the wicks kind of bounced off, came down, bounced off, came down. It was essentially channeling. And then I noticed that it started creating lower lows, and they're very, they're not very stand out, but you can see, especially, within these several candles, the stock kind of breaks this level of support that it had been bouncing on. And I expected the stock, being up 40%, that it would probably not go back into that channel, which it did break into that channel, and it's still in that channel. But let's look at it from a perspective of the SMAs. So on the 5-minute chart, also I noticed that the 8 SMA was approaching the 20, and that was a confirmation for me. I saw the cross right here, that there was a likelihood of a bearish move. So that is also confirmation that I added to my short. And of course, it's never a silver bullet. It popped right back up above, the 20 SMA, and went into another kind of bullish phase, which we can kind of see currently. It's still moving upward. So this one's, honestly, it's, in layman's terms, it's just in a channel. But the reason for my entry on a short side is that from a smaller time frame, I recognize that the stock looked bearish from that arch, and building lower lows, and also the supply zone. And then from a larger time frame on the 5-minute chart, I noticed that the 8 and the 20 looked like they were going across. So that was the recognition and the reason for my entry in that position. Does that answer the question?
Yeah. Then I was saying, moving forward, I was gonna say, with this trade, what are we looking for? Now, because I got out of mine, I was just tired and tired of trading it, and it just, like you said, I know you said this earlier, it just wasn't going in the direction. So I forgot which one you mentioned, but I got out of this play because it wasn't going in my direction. So I just got out of it. Had the interviews to do, so I didn't want to keep track of it. So for you, what are you looking for the rest of the day, really, with this?
With this play, it's kind of up in the air for me, and honestly, I would be monitoring it if I was not on the interview. But I averaged up in my short when it popped up in these ranges. Actually, it was on this candle that I added to it, and brought it up about 6 cents. I'm only holding about 500 shares on this one as we speak, on the short side, and my stop loss is at the high day. So if we go above 835, I'll get stopped out. And I don't typically just let things sit in a channel, but ideally I would like to see, as we see these two SMAs approaching each other again, I would like to see this purple line cross over the 20 SMA, and move back towards VWAP. I think if we broke this kind of shelf right here in the 790 to 8 range, we would see a major sell-off on stock. So that's kind of my perspective on this play. If we do see a new high a day, it could just be a slow grinder throughout the rest of the afternoon.
So looking forward, I would say, besides the 8 and the 20, what was, then that might be it, but that's my question. What is probably your most successful strategy that you use the most?
Most successful strategy is definitely shorting impulsive moves, averaging or scaling into my position. So we can go back to pick, because it's a great example of kind of what I mean. scaling or averaging into your position when you have some confirmation that there is a resistance. And these high wicks, these supply zones, that's a very good confirmation that it's not going to go much higher. So I would, if I was in on this play at the time I saw these wicks, I would be averaging in on all of these pops and adding to my short, even if it popped up a little higher. I would try to get as much of my position in the range where the wicks were kind of not finding buyers as possible, and then kind of just watch for those SMAs across and ride this one down. For me, if I had gotten into this play, it would probably be in a sizable manner. Being a $4 stock, I would probably pick up about 10,000 shares of this, on a scaling entry. And then, once I saw that SMA cross right in here, I would probably, set a stop loss and go away to lunch, because that kind of confirmation for me, especially when I'm in a green position, I don't think this stock has any business being up in this range, 75%. Especially if there's no news. And honestly, I didn't get into the play, so I don't know if there's news or not. If there was no news on this play, I would have no problem holding this short until 4 o'clock.
Real quickly, back to EIGR, because I just said these questions. Your average cost on EIGR, and how did you find EIGR? Because of it wasn't on Dex Scanner. So how did you find it earlier today?
I find almost all of my plays from alerts in chat. And I'm kind of a prude when it comes to alerts. I don't want to know what just happened. I want to know when someone alerts something, I want to know from a predictability standpoint that there is a probability of something happening. So when people say like, oh, 5,000 shares short at this price, it's like, that is not an alert to me. That is just a announcement of your position. Every time I put an alert into chat, I want to say, there's a probability of something happening. And whether or not, someone chooses to look at that, I want to at least give them a heads up, that within the next, 30 seconds to 5 minutes, that probability could increase or decrease. The reason I got into EIGR and the reason that I found this play was it was mentioned in chat. I opened it up. Right as I opened it, I looked at the 5 minute. I saw the arch on the the play, and I saw the SMAs about to cross, and I was like, all right, that's a no-brainer short. And it still kind of is me, to be honest. I don't necessarily think this stock has much more to go. I've been surprised before, but that was the reason I got in. As simple as that. When those two lines cross for me, that's one of the biggest confirmations that it's losing steam. You can kind of picture it as like a train going up the tracks. And as soon as the steam runs out, it kind of just stops. And that's where I saw, this kind of stock hitting this range right in here.
Matt brought up the other day, that was the big thing that Matt brought up, was the exhaustion thing, and I never recall it. Doesn't me with my sandwiches and all the terms that I bring up, but that exhaustion is what it really is, what's happening right here and what we're looking.
Exactly. I mean, let's be honest. 90% of the stocks we trade are complete shit. Like, they're just, within the next 5 to 10 years, these companies will be bankrupt. Their stocks will be delisted. Most of the stuff we trade are pumps and dumps, just guys like us sitting behind their computers, or hedge funds or market makers, battling for liquidity and pushing stocks up and down to, algorithmically move things and manipulate things. So you have to be aware of that, and you have to understand that, as Dex says, when you go out on the field, you're not going to, play like Tom Brady your first season. So you have to take that into consideration. As a new trader, you have to, kind of learn those fundamentals and then put them into practice before you take any high risks.
Kind of like what we brought up the other day, that big experience for now. Real quickly, Agaska, and they kind of multiple questions on the same thing. So Agaska says, what are those indicators of the crossover, and confirm your short? I'm sorry, one more time. Alex Vaughn, or I should say not you, but the Mitchell said, "What do you use? Why do you use the SMAs instead of the EMA?" So kind of just go over the whole indicators again. I know May asked, "What are those indicators on your chart?" So what are the indicators on your chart, and kind of go over real quickly again that 8 and 20 SMA and how exactly you use it, and how you and Matt are just destroying it.
Absolutely. So let's start with the indicators on my chart. Of course, I chart support and resistance on a very frequent basis. I think that's the most important fundamental in trading. If you don't understand support and resistance, you have no business putting your money into any day trade. If you're buying in the middle of a range, or just kind of going into a stock naively, unless you're holding for a swing or a long-term trade, there is no reason that you should be doing that. So I very frequently, when I'm interested in a play, I will go back, days on the chart, several days, sometimes even weeks or months, and I will identify very major levels of support or resistance that I can find. This one is not a very good example of that, but let me go back to the daily chart. All right, so here we have it. I mean, look back to November of 2021. The last time this stock was up in this range, it kind of topped out right here at 820, and then it tried to get back up to that level and it didn't make it, and we had a major sell-off all the way down to $4 where it bounced around for a few months. In the last few days, we had that kind of masterpiece look where it started to gain some momentum, and this morning we had a huge buying segment where the stock pushed up all the way to 835. This is EIGR. But one of my thesis is that I don't think the stock is going to break these levels, because if you go back all the way to September of 2021, we still have resistance right in this range. So that's kind of my break off. If it gets above this, then we're going to probably see, more of a buying phase. But I don't think that this stock has much more to go for the day. So anyone asking, why are you still in EIGR? That's my thesis, and my conviction in this trade has not changed, even though the stock has gone above my entry several times, and that's why I've continued to add.
That's another question I had. So what was the average entry? And then D. Sarley asked, do you think it'll dump below the VWAP today?
I can't answer the VWAP question. I think there will be.
Come on, you don't have that globe over there, that little ball, the little magic ball. Come on.
I think there's a high likelihood that it will hit VWAP. I don't know if it's going to go underneath. What was the first question? I apologize.
Average entry for it.
I first got in, I think, in the 8-10 range, and on those pops I averaged up. I believe I'm in the mid 820s. I think I might be 822. So I'm somewhere in that range, and I'm still holding. And if this stock continues to pop, I will probably add once I can, watch it and monitor it. It gets above, these levels where it's seen, major resistance over the past year. I have no conviction that this stock is going to run. And since it's struggled so much today, I don't think it's going to continue. I've been wrong, many times. So no, I don't want people jumping into this, on a short bias saying, oh, well, he said it's going to go down. This can change within 10 seconds, but 100%. That's my personal conviction.
But yeah, so that I love that you say that, because that's the same thing I get like earlier, which are like someone popped in, but we will be wrong. So yes, exactly. There are going to be times when we are definitely going to be wrong. The main thing is being your own trader, but being right 60, 70, 80% of the time. Your money just can keep up with your conviction, because that's where the confidence comes in. It's like you're saying, and it just continues to persist, and then it just builds up to where you trust your trade. You know what you're looking for, essentially. So last questions over quick in chat. If you have any questions for Matt, and that's what I'll say, I'll release you from recess so you can go watch your trade. But any last questions here, last couple of minutes here, have any questions for Alex Vaughn, hit Alex up right now. I know he wants to go watch the trade, get away. We've been doing this for about 45 minutes, an hour now. Any last questions? He's kind of gave us really the big rundown, what he was looking for and going over. I appreciate, and again, thank you so much, Mr. Vaughn, for coming over here. And again, yeah, tell your older brother I love his movies. I haven't seen him too much recently, but Vince, he's a great actor. I love him. He's a very good friend of mine. Oh, I would love for him to be a very good friend of mine. He's a very funny man. All right, what do we got, team? Any last questions here? And they're loving it. Thank you again, though, Alex, for coming over. You can tell they're very appreciative for you coming over here. So certainly thanks again. So, yeah, any last questions? Okay, here we go. D. Sarley, do you ever look for higher lows and lower highs and stuff like that? EIGR, lower highs, anyway, lower highs, blah, blah, blah. Do you look for that?
Yeah, absolutely. And EIGR isn't really a great example because it's kind of just been farting around in this channel all day. But one of my favorite stocks to trade is Affirm because it has good liquidity. It continually, finds trends and then makes impulsive moves off that trend and then finds its way back to it. This is one of the stocks that I trade, very frequently, if not daily, weekly, when the volume's there. But, I'm always charting trend lines and always putting in, major levels of support. But I've gotten to the point, and I'm sure a lot of traders have, where, I can look at a blank chart and kind of identify those areas without having to put the lines in. It's good, if you're playing multiple stocks to put those lines in so you can just, bounce back to the screen. But, looking at a stock, I think that's kind of that language, that aspect that I mentioned, until you can identify, setups, bearish and bullish setups, whether it be a head and shoulders, an ABCD, a trend line crack, you should be able to recognize a trend line crack without having a line in there. And I think once you get to that point, you've got those fundamentals down.
Honestly, can't thank you enough for coming over here. We got Plum Diddy, Anthony R. Stars, Changes Will Come, Jackie Chan, I always call him Jackie Chan, but Clutch, everyone. I got so many people, Miss Boss, Mafia, Wild Boys, so many people were appreciative of this, Telma. So thank you so much for giving us your time. I'll release you now to go watch some NCAA March Madness and then to also watch your trades. No, thank you so much, man, and we'll get to doing this again next month. So appreciate you once again for coming on over, and again, everyone, round of applause for Alex Vaughn for coming over, giving us time, showing us his charting and what he's looking at each and every day and his indicators. Honestly, man, can't thank you enough. Have a good rest of your day. Who are we going for again? What's your team? And then somebody, I forgot, where's it at? What's the team?
I'll tell you my team, but first I want to send you some accolades. I think I have learned more watching your afternoon sessions than any other individual I've tracked, whether it be YouTube or Deck himself. Deck got me into it, but I think your trading style and your risk thresholds are much more aligned with my strategies. And I want to influence anyone who is kind of on the fence about taking a lesson with AK. Josh is fantastic. Those lessons are exquisite, and they will change your game within 1 or 2 sessions. So make sure you guys get into that before he raises his prices, because he's probably going to do it based on demand. I'm going with UK. I'm an Ohio guy, but I think
that's what I thought. I thought you were an Ohio guy, but yeah, I didn't think
year.
You'd go O State. Yeah, and what's funny, I have Kentucky in the championship losing to Zona, so we are at least agreeing on that. I just like I was still on the fence, but I was so busy this morning. I was thinking about maybe even changing it back to Kentucky. I was going back and forth, so we're really close to that even thinking then there. And thank you for those comments, man. Seriously, so humbling and super appreciative. But so you're going Wildcats, huh?
Yeah.
Oh, and real quickly, who's the dog in the background? I love the picture.
That is a commissioned piece of art that I had an artist named Nicole Gayton out of Denver do. It's a picture of my husky. If you guys Google Piper the Husky or find me on Instagram, my husky had a 20 minutes of fame. She was on Animal Planet. We got on the Ellen Show. It's a long story, but famous dog, Piper the Husky. That's her.
No idea. That is awesome. Because me having 12 dogs, you'd be like, AK, you don't know who this is?
It was back in the Vine days when Vine was around.
I remember Vine. Those was 6 seconds, weren't they?
Yeah. Yep. We had like 200,000 followers, and it was dumb. But you know, it exploded overnight, and that's that.
Well, dude, again, thank you so much, Alex Vaughn, for coming over. Have a good rest of your day, boss. Thank you so much. Go Wildcats for both of us, because I need those. We need those points to, you know, for our brackets. And otherwise, man, have a good rest of your day. See you, of course, all day live for commentary whenever you're around. I love having you in my chat. Your alerts are amazing. And yes, thank you, Miss Boston. Anyone else? I noticed it though too. I knew you were a gold trader. You wanted that. You wanted the gold. Have a good rest of your day, boss. I'll talk to you soon.
Take it easy, guys. Thank you.